Yeah, good afternoon, everyone, and thanks for joining us today for this webinar on Diwali Picks for Samvat 2082, or we can say Diwali Pick 2025. On behalf of SBI Securities, I wish you all a festive greeting, happy Diwali, and prosperous New Year going ahead. So we will start this presentation with an performance of last year Diwali pick. So it's very important to study what has happened during the last 1 year, and what is the performance of our Diwali pick, which we have recommended during the last Diwali that is in 2024, because that will help you build the confidence that we are being very transparent in terms of sharing our performance with all of you. So last year, if you remember, during the Diwali, we have recommended 12 number of companies with all of you. And out of 12, we have been successfully managed to close the 7 calls in profit. Out of those 7 calls, 6 calls have attended our the set target price, and one stock, which is the GSK Pharma, we have exited ahead of the target because there was a lot of uncertainty on pharma sector. But we will run through each and every company, and then we will move forward to our outlook for 2082. That is the upcoming Diwali year. So, if you look at the table which is visible on your screen, you can see the name of the stock in the second column. And the most important point here to note is the percentage return, which is which has been delivered during this Samvat. And the last column, which is showing a percentage return, assuming the highest price achieved during the year, right? The first stock which has achieved the target was Kilburn Engineering. So that was recommended at price of 431, and the target price was 532. We booked profit at price of 532 only. So the 23% return was achieved in the span of 276 days. Had we hold on to the stock, the highest price achieved in Kilburn Engineering was on 30th September 2025, and that price was 618 rupees. So had somebody hold on to the stock till 30th of September, the percentage return would have been approximately 44%. So now when I say 44%, I am referring to the extreme right hand side column, which is showing the percentage return assuming the highest price achieved during the last 1 year. Moving on to the next stock, which is the Nippon Life Asset Management Company. That stock was recommended at price of 702 and on 21st of October during the last Diwali, and the price target was 825. We have recommended you to exit or book profit at 853 rupees, and the stock has delivered approximately 21.5% return, and the number of days it took to achieve that target is 268. Had somebody hold on to the stock recently, that is on 3rd of October, the highest price achieved was 898 rupees, and the return is closer to 28%. Moving on to next stock, PG Electroplast. That was one of the stock which has achieved our target within the span of only 42 days. So the stock was recommended at price of 617, and the target price was 735. And we book profit. We recommended you all to book profit at price of 747, and a very decent return of 21% was achieved in the span of 42 days. Had somebody hold on to the stock, so we have seen the highs of 1055 levels on 6th of January 2025. Had somebody hold on to the stock in the month of January, the return would have been 71%. The next stock is Lodha Developer. If you look at Lodha, we have recommended this stock at 1161 level, and the price target was 1398. We recommended you all to book the profit at rupees 1400, which is closer to the target price, and the return again there was closer to 21%, and the target price was achieved within the span of only 50 days. Had somebody hold on to the stock till 9th of June 2025, the highest price on the during the last 1 year was 1535, and the percentage return assuming the highest price was 32%. The next stock was Newgen Software, recommended at 1258. We booked profit at 1487. Again, a cool 18% return in the span of 57 days. Had somebody hold on to the stock till 15th of Jan 2025, when the stock scaled a high of 1795, the return would have been 43%. Bharti Hexacom recommended at 1507, and the target price was 1747, and we recommended you to book a profit to at 1720, which is a closer to the target price, and 14% return was delivered in the span of 199 days. Had somebody hold on to the stock till July 2025, the return would have been 36% when the stock scaled a new high life high of 2051. Glaxo Pharma, so as discussed earlier, although the target price over there was 3195, we recommended you all to book the profit at 2977, which is 8% with an 8% upside. And the reason we recommended you to exit that stock with an 8% gain was because there was a lot of uncertainty pertaining to this tariff on pharma sector. And there was a lot of volatility and negative narrative which was going against the pharma sector and including GSK Pharma. So we decided that let our client or our customer enjoy the profit rather than booking in losses. But later on, the stock went on to scale the high of 3516, that is 3516 level on 5th of June. Had somebody hold on to the stock till the month of June, the return would have been 32%. Now, the moving on to the next five stocks which are open currently as we speak. So, Chalet Hotel, we have recommended at 873, and the stock has scaled high of 1080 levels recently in the month of August. And as we speak, the stock is trading closer to 975, 980 band, and that's again a 12% return. Although the call is open, we are planning to exit from Chalet Hotel in the next 15 to 20 days because as we speak today, we have seen a very good momentum in hotel stocks also. So we believe Chalet Hotel is one of the best hotel in terms of the performance which the company is likely to deliver over the next 2 years. And the Chalet Hotel has the potential to deliver 30% kind of earning CAGR over the next 2 years. So again, one of the best stock among the hotel industry. Moving on to the next stock, which is Escort Kubota. So as we speak, the stock is trading closer to the recommended price of 3800, and the return which the stock has delivered is almost nil during the last 1 year. But looking at the way GST rationalization story has played out for an auto sector, Escort Kubota has also reported a very solid set of monthly sales number for the month of September. And we believe that second half of fiscal year 26 is likely to be a very good period for a tractor industry. And Escort Kubota can be one of the beneficiary of this uptrend in the tractor volume over the period of next 5 to 6 months. So Escort trading at no profit, no loss as we speak. We believe we would like to wait for an October sales number because it's an Diwali month, and we believe again October can be a very robust month for Escort in terms of sales volume. And in case the company is able to deliver numbers far better than expected, we can see that prices can move towards 4,000, 4,500, or for that matter, can breach the 5,000 level also. So Escort Kubota, we are recommending you to hold on to the stock. Arvind Fashion, again, one of the market leader as far as fashion business is concerned. They have got a very robust portfolio of US Polo, Tommy Hilfiger. And the stock was recommended at 605, 600 levels. And right now, the price is around 530, 540 level. So that's down 10% from our recommended level. Coal India was recommended at 492. If we add a 32 rupees dividend, which was doled out by the company during the last 11 months, the return as we speak is down, is negative 15%. And Titagarh Rail, again, that the stock which has created a dent in the portfolio during the last 11 months, and the stock is down by 25% post our recommended post we recommended that stock on 21st of October. But one has to keep in mind, post our recommendation, the stock went to scaled a new high immediately in the month of December. So closer to 1370 levels we have seen. And at that point of time, the stock was trading up 14% post our recommendation. But what happened post December quarter, the company started facing issue with regards to the supply of wheel set. And without wheel set, making a railway wagon or for that matter metro coaches, it's next to impossible. And as we speak, the Titagarh Rail has indicated that the issue pertaining to wheel set is behind them. and going forward they will be able to deliver a kind of 1,000 wagon on a monthly basis. So we are expecting that second half of fiscal year 26 is likely to be very good in terms of earning growth for Titagarh Rail System. Again, it's a market leader as far as railway wagon production or metro coaches is concerned. So again, one of the good stock to have in a portfolio. But as discussed earlier, we would like to close the entire basket of Diwali pick over the period of next 15 to 20 days. And if I take a blended average return, assuming that if I would have invested 1 lakh rupee equally in all the 12 stock, and I would have closed the basket on the date of release of this report, that is on 3rd of October, the return, blended average return comes to equal weighted basket, the return comes to 6.8%. And that's a decent return. One has to keep in mind that during last 1 year, Nifty and Sensex have delivered a kind of flattish return. And on the top of that, we have been able to generate a decent return of 6.8%, which is a clear-cut outperformance versus the benchmark index. Gautam, can we move on to next slide, please? So if you look at this slide, the left-hand side top chart indicates the performance of our Diwali Pick 2024 basket. That is closer to 6.8% as discussed earlier, versus Nifty has delivered a return of 1.3%. One has to keep in mind that when we are talking about this data pertains to the 1st November 2024 and for the period of 1st November 2024 till 30th of September 2025. So for all the benchmark indices, we have taken this period. And for Diwali Pick 2024, we have taken 3rd October as a closing date for the basket. So 6.8% return in Diwali Pick 2024 equal weight basket versus 1.3% by Nifty 50, 0.7% by Sensex, a flat return by Nifty mid cap index, and negative return of closer to 6% by Nifty small cap index. So clear cut outperformance as far as performance of last year Diwali picks are concerned. If you refer to the right hand side top chart, this chart indicates the performance of various sectoral indices during this period of 1st November and 30th September. So you will notice that auto, metal, and auto and metal sector were a clear outperformer during the period of this last 11 months. And the reason for that is that post the announcement of GST rationalization by Honorable Prime Minister on 15th of August, that is on Independence Day, we have seen a massive up move or outperformance by an auto stock. So that has led to an outperformance by the BSE auto index. Metal index again is a clear-cut outperformer. So we have seen a very healthy rise as far as realization or metal prices are concerned, and hence that has led to an outperformance as far as the metal index is concerned. The third is Bankex. Again, banking sector although has delivered a lackluster return of 4.5%, but that is still better than the Sensex, which is a kind of flattish 0.7% return. And if you look at an extreme right-hand side of this chart, you will notice that IT sector has delivered a negative 18% return. Power sector has delivered 15% negative return, and real estate sector has delivered a kind of negative 14 to 15% kind of return. IT sector, we all know the reason behind this very strong performance is because of this global uncertainty and a significant slowdown as far as earning growth for an IT companies are concerned. Power also, we have seen a massive outperformance post-COVID between the period 2022-2024, and last 1 year has been a kind of consolidation year as far as power is concerned. Moving on to the next chart, which is if you look at then left-hand side bottom chart. So we have compared the performance of Nifty and Sensex with the various global indices. So we'll notice that India has been a kind of very big underperformer. So Nifty and Sensex, as discussed earlier, has delivered a kind of flattish return. And as compared to that, various indices like Kospi, Hang Seng, and Nasdaq, or for that matter, DAX, which is a German indication of German equity market, Shanghai, all these indices has delivered return to the tune of 18 to 24% during this same period. Moving on to the next chart, which is on right hand side bottom chart, you will notice that this chart indicates the FII and DII fund flow. So the bar in the red is indicating foreign institutional investor fund flow. So it has been pretty volatile, and we have seen a very aggressive selling by foreign institutional investor, especially during the July to September period, where we have seen a consistent outflow on a monthly basis to the tune of 25,000 to 30,000 crore. But DII have been supporting the market, and they have been consistent buyer during the last 11-12 months. So every month you will notice that DII have been pumping money in the market. Next slide, please. Again, this is a summary of what we have discussed earlier. So we have seen a muted performance of the market during the Samvat 2081. Again, so very minuscule return of 1.3% on Nifty and 0.7% on the Sensex. One important point which I would like to draw in front of you from this slide is what was the reason for this muted performance of domestic equity market, and that was the only reason which comes to my mind is the earning growth. So if you notice during the last September quarter, that is in the quarter two of FY25, we have seen that earning growth of Nifty 50 companies have tapered down significantly. So if you remember in the month of during the quarter of September 2025, the Nifty EPS growth was hardly 7.6% year over year, and that was lowest since the December 22 quarter, and that spooked the investor, and that led to a massive correction post this weak earning growth, which was seen in the September 2024 quarter. And again, if you remember, at that point of time, Nifty also scaled new high. So 27th September is the date I remember when the Nifty scaled a high of 26 200 300 level, and post that we have seen a consistent correction and consolidation of the last 11 to 12 months. As discussed earlier, third point, FII has the offloaded equity worth 2.4 lakh crore rupees between between November 24 to September 25 period, whereas domestic institutional investors have significantly countered it and have pumped closer to 6.6 lakh crore rupees, that is 6.6 trillion rupees in an Indian domestic equity market. Next slide, please. Last 2 point, looking at that what happened during the last 12 months. So monsoon this time has been above average. So we have seen a very robust monsoon, and in fact, an elongated monsoon. So if you remember, monsoon this year started from mid of May and was continuing till the first week of October. So overall, pan-India monsoon was 7% above the long-term average. And as we speak, the water reservoir level, that is the water which is stored in the various reservoir, which are spread across pan India, closer to 161 reservoir is the for which the governments share the data on a regular basis. So even all those reservoir, the volumes are closer to 90% of their storage capacity. So this augurs well for a Rabi crop also going forward. And during the last 12 months, one of the important development which we have seen is that there has been the reduction of interest rate by Reserve Bank of India. So if you remember, in the month of December 2024, there was a change of guard at Reserve Bank of India, and post that we have seen Honorable Governor reducing interest rate by 100 basis points. And at the same time, we have seen that cash reserve ratio will be decreased from current 4% to 3% by November 2025. So that will add closer to 2.5 lakh crore of additional liquidity for in the banking system. Then during the last budget, we have seen that tax-free limit for income tax filer has been increased to 12 lakh rupees. So that has added a lot of additional income, additional disposable income in the hands of consumer. And from the beginning 22nd of September, we have seen the rationalization of GST. So for most of the goods, we have seen that there has been a reduction of GST, and especially on auto as well as insurance sector, there has been, and day-to-day consumable item, which is a consumer staple item, we have seen a significant cut as far as GST is concerned. So that was a pretty big development. Interest rate cut, reduction in CRR, increase in tax-free limit for income tax filer, and rationalization of GST. Yeah. Next slide, please. So till now we were discussing what happened during the Samvat 2081. Now let us look forward that what will how is the economy looking going forward, right? Gautam, if you can move to an earlier slide. Yeah. So again, if you look at the left-hand side top chart, you will notice that this chart is indicative of a forecast of GDP growth for India versus the various other global economies. So India is one of the largest, fastest growing economy in the world, and the estimate is that India is likely to deliver a 6 to 6.5% kind of real GDP growth over the period of next 2 years. The right hand side top chart indicates the inflation data for India and US. So as you would have noticed that inflation has picked out in the month of May 20 or 22 or September 22, and post that we have seen a consistent reduction as far as inflation numbers are concerned. Again, there are two sides to this inflation. One, on one hand, lower inflation offers a lot of flexibility to Reserve Bank of India to further reduce the rate in the economy. On the other hand, lower inflation leads to a kind of lower nominal GDP growth. But again, one has to keep in mind that as the low base effect start to kick from the next year, we will see that inflation will go back to a normalized range of 3-4%. So if I add a real GDP growth number of 6 or 6.5%, and if I add a nominal inflation number of 3 to 4%, the nominal GDP growth should be back to 10%, 10 to 11% beginning fiscal year 27. So this year will be a muted year in terms of nominal GDP growth, but FY27 is likely to be a better year. And at the same time, inflation which is under control offer a lot of flexibility to RBI. So there is a probability that maybe 3 to 4 months down the line, RBI may further reduce the interest rate in the economy. Moving on to the next chart, which is the left-hand side bottom chart. This chart indicates the forex reserve which Reserve Bank of India is holding in India. So as we speak, during the first half of FY26, the average reserve with an RBI was closer to $700 billion, and that offers a decent 11 month of import cover. So that's again an added positive as far as the economy is concerned. Moving on to next chart, which is on right hand side bottom chart. This chart indicates the government capex number over the period of last 1 year, last 1.5 year. So you will notice that if you remember, last year there was an general election, and because of code of conduct, we have seen that there has been a significant reduction in terms of spent by government on a capex program. So if you look at chart properly, between the April 24 to June July 24 period, there has been a significant dip in terms of government capex. And as we speak, during the last 3 4 months, there has been a continuous uptrend in terms of government spend on capex. So that's again a positive development, because ultimately in a current uncertain environment, government is the largest spender in the economy, and ultimately if government drives and provides incentive to the various businesses, that will have a virtuous effect on an economy. So overall, if I have to summarize this slide, India's macro is on very strong footing. So despite of lot of global uncertainty going on because of this global trade war, Indian economy is on a very solid footing. And again, there is no issue as far as any economic growth or parameter is concerned. Next slide, please. So we have discussed this slide using this all these four charts. We can skip this slide and move on to the next slide. Yeah, again, so what we have discussed till now is that how was the performance of our Diwali peak last year. Then we have seen that what were the key development during the last 1 year. Then we discuss about Indian economy, how Indian economy is on strong footing. Now moving on to the next important point is earning growth and valuation, which is one of the most important fundamental aspects for any investor from if somebody is planning to invest from a medium to long term perspective. So if you look at the top chart on left hand side, that chart is indicating 1 year forward price to earning multiple of Nifty 50. So if you look at 1 year forward price to earning multiple for Nifty 50, that is trend that is right now placed below the 10-year average. So that offers a lot of comfort in terms of valuation. Moving on to the right hand side chart on the top and right hand side chart, that compares the valuation of Nifty and Sensex versus the various global indices. So as we speak, Nifty 50 and Sensex are trading closer to 22 times price to earning multiple based on FY26 earning, and that is slightly expensive as compared to Nikkei, DAX, CAC or Shanghai, and at a slightly cheaper valuation as compared to Nasdaq and S&P. So one has to keep in mind that there has been a massive outperformance by US indices during the last 1 year, and again the US index are trading at an expensive valuation as compared to India. We will discuss more about this on the next slide when we compare the valuation of Nifty 50 versus the MSCI emerging market basket. The left-hand side bottom chart, this indicates then EPS growth of Nifty 50 for between the period FY23 to 28. So if you would have noticed, FY25 to 26 growth is 3.4%, and that's a single digit growth we have witnessed after a pretty longer period of time. So between FY20 to 25, the growth of Nifty 50 EPS was closer to 14-15% CAGR, and then all of a sudden there was then fall as far as the growth is concerned. So FY26 is the year where the street is expecting 3 to 5% kind of profit growth for Nifty 50 companies. But having said that, on this low base, FY27 and 28 is the period where Nifty EPS growth is likely to go back to 13 to 15%. So double-digit earning growth is something which investors look forward to when they invest in India, whether it is a foreign institutional investor, domestic institutional investor, or retail or HNI investor. Ultimately, double-digit growth is something which everyone is looking forward to. So now, since most of the negativity has already been discounted during the last 12 months, the street is hopeful that beginning December 25 quarter, the earning growth will start to recover. And for full year FY27, the Nifty 50 EPS is likely to be in the range of 1280 to 1300 rupees, and that will further go up to 1450 to 1500 rupees in FY28. So just to summarize this slide, Nifty 50 currently is trading at price to earning multiple of 23 times FY26 and closer to 20 times FY27 multiple. FY26 is a kind of blip year in terms of earning growth. So again, after a very rock solid earning growth seen between FY20 to 25 period, 26 has turned out to be a year of consolidation, and again FY27 and 28 we will see a rapid earning growth. On a relative basis, Nifty 50 is trading at a premium valuation to MSCI Emerging Market Index. But one has to keep in mind that this premium has shrunk from 72% in the September 24. So why I'm comparing with September 24 and September 25? So if you remember, the market has scaled new high in the month of September 24. So 27 September was the period where Nifty or Sensex has scaled a new life high. At that point of time, a Nifty 50 price to earning multiple was trading at 72% premium to the MSCI emerging market price to earning multiple. And now that premium has shrunk to 46%. What is the reason for the shrinkage in the premium? On the one hand, we have seen an underperformance as far as Nifty 50 Nifty 50 returns are concerned. On the other hand, other emerging markets have performed very well. So the premium has shrunk from 72% in September 24 to 46% in September 25 as we speak, which is again a below a 10-year average. So Gautam, we can move on to next slide. I will explain this from the next slide. Yeah, so if you look at this chart, so this chart is the indication of. So if you refer to the topmost chart, this chart indicates the premium and discount of Nifty 50 price to earning multiple versus MSCI emerging market price to earning multiple. So if I plot the ratio of Nifty 50 price to earning multiple to the MSCI emerging market price to earning multiple, and if I try to compare what is the premium and discount at which Nifty 50 is the trading versus the MSCI emerging market in terms of valuation, then this chart will be plotted. So if you notice, as we speak, the premium of Nifty 50 versus MSCI emerging market has shrunk below its 10-year average of a 10-year average. So that gives a lot of comfort to the investor. The risk reward is favorable. Similarly, if you refer to the chart which is at the bottom end of this slide, this indicates the valuation premium and discount to the MSCI developed market. So historically, Nifty 50 has traded at a discount to MSCI developed market, and that discount has further increased as we speak, because during the last 11-12 months, we have seen that the developed markets has outperformed the overall global market, and Nifty, the performance of Nifty was a kind of flattish. So discount has further increased as compared to the developed market. So both the scenarios are indicating that the premium of Nifty 50 versus MSCI emerging market has shrunk below 10-year average. On the other hand, Nifty 50 discount to the MSCI developed market has increased significantly during the last 1 year. So this offers a lot of comfort in terms of risk reward going forward. So Nifty is very well placed going forward, and whenever we have seen that there is a concept of mean reversion. Whenever you go below long-term averages, the market will try to bring all those indices to the averages. So this clearly indicates that going forward, India, the underperformer tag may go away, and we may see a kind of outperformance by Nifty 50, or for that matter, other benchmark indices versus their MSCI emerging market or developed market index. Yeah, next slide. Yeah, so again, so this is a slide which captures our outlook for next 11 to 12 months, that is Diwali to Diwali. So again, during the Samvat 2081, what we have told is that this year is likely to be the year of consolidation, and that thesis has proven very right. So the return was the kind of almost flat as far as Nifty 50 and Sensex is concerned, and we were right in our assessment that the reason for this kind of consolidation will be deceleration in an earning growth because of slowdown in government capex, overhang on export because of the euphoric win by Mr. Trump in United States of America, relatively expensive valuation which has now cooled off as we speak. And one has to keep in mind that we were when the market still new high in the month of September 24, the market has already delivered a very fantastic return of 27% CAGR as far as Nifty is concerned during the period FY20 to 24 period. And on the back of such a humongous return of last 3-4 years, there was a probability of huge profit booking, and that same has played out during the last 11 to 12 months. As discussed earlier, moving on to the second point, India's macros are on very strong footing. So just to testify the same, we have seen an rating upgrade by S&P Global after the span of 18 years in the month of August. So India's rating has been upgraded to triple B from triple B minus. So that again shows a lot of confidence as far as the rating agencies are concerned. The third point we have already discussed, that during the last 11 months, we have seen a lot of measures by government and central bank to give boost to the consumption. So we have seen repo rate cut, we have seen CRR cut, GST rationalization, and tax benefit. So all this should augur well as far as as far as consumption in India is concerned. Another important point which we all should know is that India is sitting on a gold mine, because if you look at an cumulative gold reserve or gold which Indian households are holding, that is closer to 25,000 to 28,000 tons of gold. And as we speak, gold is trading closer to 1,20,000 rupees on a for every 10 gram. And if you add this number is a pretty large number, which is giving a lot of confidence to an Indian household to consume the goods and services as we move forward. Next slide, please. As discussed earlier, earning growth for the listed companies is likely to return to double digit beginning December quarter. So as we speak, the September quarter is ongoing, and we have already seen that the numbers of IT companies are either in line or slightly better than expected. The banking sector are delivering a better set of numbers. So Axis Bank reported a very strong operational growth, and that is the reason we have seen a massive outperformance today by the banking stock. So Kotak was one of the key leader as far as the clear outperformer in today's trade. So again, September quarter may be a lackluster quarter in terms of earning growth, but the outlook for December quarter and March quarter is likely to be very upbeat because of these various measures which government has taken. So I think again that's one of the positive sign to be or one of the factor that should help investor to remain optimistic or bullish for next 6 to 12 months. The next point is the domestic liquidity. So despite of so much negativity, we have seen that for domestic institutional investors have pumped money to the tune of 6.6 lakh crore, that is rupees 6.6 trillion Indian equity market. And as we speak, the inflow in the mutual fund through SIP route is closer to life high. That is 29,000 crore rupees every month we are getting an inflow through mutual fund. And even we have started seeing an uptrend in terms of new demat account opening. So as we speak, the demat account count in India has crossed the 20 crore mark, and that will also help many investors to plow the money directly in the equity market, and that again augur well as far as domestic liquidity and FII outflow is concerned. Because one has to keep in mind that FII has been consistently selling, and despite of that, because of the strong domestic liquidity, markets have not done so bad. So we have been trading pretty range bound during the last 3 to 4 months. So if you remember, Nifty has been trading between 24,300 levels to 25,300 levels during the last 4 to 5 months. And as we speak today, the market was trying to attempt to come out to break that level and move upward, right? I'll discuss valuation premium. In the month of September 24, Nifty 50 price to earning multiple was trading at 72% premium versus MSCI Emerging Market Index. And as we speak, this premium has shrunk from 72% to 46%. So that offers a very favorable risk reward ratio for any investor who is planning to invest money in an Indian equity market. And at the same time, primary market has been pretty buoyant during the last 4 to 5 months, especially. And many new sectors are coming up for an listing, right? So many new age platform businesses, co-working spaces, B2B jewelry businesses, pre-engineered or prefabricated buildings is a new sector which has seen many companies getting listed. Industrial gases, precision engineering. So there is a whole lot of opportunity which is available to invest for an investor. You only need to be at the right place at the right time to outperform your peers or benchmark index and deliver a decent alpha from here on. Going forward, which are the sectors where we feel there can be a massive outperformance? So we have shared this list in our report, so that if you look at the bottommost paragraph in the report, the sector which we believe can deliver a fantastic return over the period of next 9 to 12 months are auto OEM and auto ancillary. So again, this is the one sector which is a clear cut the biggest beneficiary of the GST rationalization announced by Government of India. Cement, usually for cement, second half of fiscal year is a very good in terms of volume growth. So cement is likely to do well over the period of next 6 to 12 months. NBFCs, especially which are focusing on MSME, housing and gold. So these are the three pockets. And at the same time, vehicle finance. These are the 3, 4 pockets that are likely to do well as far as NBFCs are concerned. Capital market play. So after a very tepid volume during the last 9 to 12 months, now in case there is an improvement in sentiment on secondary market side, we believe the wealth managers as well as asset management companies are likely to outperform. And to that extent, we have seen a very robust set of number by HDFC AMC recently, right? So capital market play can be rided through wealth manager, asset management companies, or for that matter, RTAs like CAMS and KFIN. Selective banks. So select banks, especially from private as well as PSU pocket. EMS, electronic manufacturing services. Again, that's the one sector which government is giving full support. So that is the one sector which we are bullish on, especially the companies which are focusing on consumer durable businesses like Amber or for that matter PG Electroplast. So these are the few businesses that are likely to do well. Recycling is the new thing which everyone is bullish right now. So recycling, again, there are many players in recycling. So we have recommended one stock from recycling sector also during this Diwali pick. New age businesses. So many new age businesses like Eternal, Swiggy, Urban Company. So we have seen listing of many new age businesses, and they are giving clear cut path in terms of profitability, and that is again lapped up by the street and institutional investor. Within pharma, CDMO pack is likely to do well. Among the manufacturing, structural steel tube is the one sector which we believe is likely to do well over the period of next 12 to 18 months. Office leasing, select companies can do well. So the earlier one which got listed like AWFIS Office or for that matter EFC, both the companies have a relatively better set of operating metrics. Hotel, again, we have been bullish on the hotel sector since last 2, 3 years, and we believe the earning growth momentum is likely to continue in hotel as well as hospital sector. So I discussed earlier manufacturing, which is one of the key focus of government. Within manufacturing, PEB, defense, aerospace engineering, railway wagon, power equipments, including BESS or pharma ancillary. And last but not the least, metals and mining, because of the likely rate cut in the US and across the globe. So that will lead to a rush of funds towards the metal or commodities, and that again augurs well for metal and mining sector. So there is a whole lot of opportunity in the market to look forward to for making money in the over the period of next 12 to 24 months. And among this pack, we have curated a basket of 15 stock for wherein you can create a basket of 15 well diversified companies across the various cohort of market cap, and that should deliver a fantastic return over the period of next 6 to 12 months. That is Diwali to Diwali. But again, investment in equity market doesn't come risk free, right? So there are always risk factors which are involved in while investing in an equity market, and so we should keep in mind certain risk factor also while investing in an equity market. So I will request my colleague Sumit to take us through the risk factor which are involved while investing in an equity market, and which need to be on our radar for next 6 to 12 months. Yeah, over to you, Sumit.
Yeah. So, thank you, sir, for the overview. So, moving forward, let's discuss the key risk factors that can impact the markets. After all, markets are a function of earnings flows as well as the key risks that need to be kept in mind. So, daily we see the headlines on US China trade tensions, and there is also the India US trade deal which is yet to be signed. So, if there is any delay going forward in signing the India-US trade deal, again there could be an impact on the export-facing sectors, and which could keep our markets under check. US-China trade tensions are not just on the tariff front, but also on non-tariff barriers like export controls of key technologies, key manufacturing equipment, shipping impact. So all these factors are impacting the overall growth in the economy, not just in US and China, but also impacting the global economy. Also, earnings recovery, while the earnings recovery is underway, any delay in the earnings recovery, especially in the export facing sectors, could drag our overall earnings growth lower, and that could keep the markets under check. You could have a time correction if the factors don't play out as expected. Moving forward to the next slide. Again, geopolitical tensions will be on top of the mind for investors. The Russia-Ukraine war continues. Almost now we are into the fourth year of the war, and that is leading to more sanctions on Russia, which is also impacting countries like India. So there is pressure on India to reduce imports of Russian oil, and any further sanctions or restrictions on importing from Russia could mean that crude oil prices, natural gas prices could go higher, and that could impact our overall balance in the economy. Also, China again has turned aggressive, wherein it is restricting the export of rare earth magnets, which is impacting the auto industry as well as other sensitive sectors such as defense and aerospace. China is also broadening its export restrictions to other key manufacturing equipment as well. And at a time when Indian companies are diversifying into component manufacturing, any restrictions on transfer of technology could undermine our efforts. So, geopolitical tensions and trade restrictions again will remain in focus. And despite the underperformance of our markets globally in the last 1 year, we have seen that valuations, if you compare to the other emerging market, are still at a premium. And the primary market supply also continues from the IPO front. So last 1 year, close to 3 lakh crore worth of funds were raised from the primary markets, and which led to diversion of money from the secondary markets to the primary market. Just to give an example, LG Electronics IPO, the issue size was 11,600 crores. The subscription was close to 4.4 lakh crores, and that had an impact on the secondary market where individual stocks don't move at the time of large IPOs. So those concerns again will remain, as next year also there is almost 3 to 4 lakh crore worth of supply again expected. Post Diwali, many large IPOs, especially from the new age sectors, are expected to come. and that could have an impact on the secondary market liquidity. Moving forward, so these are some of the key events that need to be tracked in the next 1 year. So there will be the state assembly elections. Now, last 1 year we did not have any major elections post the Lok Sabha and the Maharashtra state assembly elections. But going forward, we have Bihar elections in the month of November, and the fourth state elections in summer of 2026, West Bengal, Assam, Tamil Nadu, and Kerala. So there will be an impact. Market will track the election outcome also, as populist measures such as the GST rate cut, the income tax rationalization that has happened, and it will be government also will be keen to know the impact on the electorate. So state assembly election outcomes will matter. Global trade also, but the tariffs and the supply chain restrictions, any developments on that will be keenly tracked. Also, India is diversifying its export basket. So rather than relying on 2 or 3 key markets, India is in the process of signing free trade agreements with other countries. So with UK, we have already signed. With European Union, we are in the process of finalizing a trade deal. Then with the Gulf countries, as well as the other countries such as New Zealand, many other nations are also in the pipeline. So diversification of exports will reduce our dependence on USA, and that will again boost our economy. So just yesterday, the September trade data was released, where overall exports grew 8%, 6 to 7% on a year-on-year basis, despite our exports to the US declining by almost 13 to 14%. So diversification will help to reduce the impact from the US tariffs. Then again, the global central bank policies, what the Fed does in terms of rate cuts and liquidity environment will also be important. Also, our central bank RBI also, it's likely that there will be at least 2 rate cuts given the low inflation that we are experiencing. So central bank policies again will be key events to track. And lastly, the budget on 1st Feb. Again, key announcements with regards to the reforms, as well as new PLI schemes and the other growth supportive measures that could be announced in the budget. So that again will be closely tracked. Moving forward, so now let's discuss the Diwali picks for Samvat 2082 one by one. So our first stock is TVS Motors. So we are essentially very positive on the auto and the auto ancillary sector. And starting first with TVS Motors, which we are recommending with a target price of rupees 3,975, upside of 11% from the current market price. So key drivers for this stock will be the demand revival that we are expected to see post the GST reduction, as well as improvement in the rural sentiment. So TVS Motors has a large presence in the rural markets, especially in South India. And with monsoon being good, the overall rural sentiment is expected to be robust, and that will support growth in the volumes for TVS Motors. Also, the company has been focusing on the export markets. So it was a late entrant in the Latin American market, but we are seeing that now, since the company is focusing on increasing its exports, it's getting good response from there. The Africa market is also recovering, and exports are generally higher margin than the domestic sales. So as the exports pick up, a margin improvement could also be expected. Some of the risk that could impact the stock would be the supply chain challenges. So any restrictions on the rare earth magnets could impact the EV electric scooter volumes, and that could impact the overall growth in FY26 as well as in FY27. And higher competition from the other players in terms of reduction in prices or higher discounts, though that looks unlikely given the strong demand that we are seeing, but that again could impact the stock. And also higher raw material prices. So any significant increase in steel or aluminum prices could lead to price hikes, and that could negate the impact of the GST benefit. So, but we remain positive on TVS Motors with an upside of about 11%. Moving forward to the next stock. Yeah, so the next stock is an auto ancillary. So since we are positive on the overall two-wheeler industry, FIAM Industries we are recommending with a target price of 2,340 rupees, and which implies an upside of 18% from the current levels, and the valuation also at 18 times on a FY27 earnings looks pretty attractive. Again, the key drivers for FIAM Industries is it's a proxy play to TVS Motors as well as Honda, which contribute 28% each to the company's revenue. It's also increasing its share with Hero MotoCorp. So, as the two-wheeler industry itself is projected to grow in high single digits, or we could even see double-digit growth this year, ancillaries like FIAM Industries could benefit the industry. Again, so basically FIAM industry supplies the lights, that is the headlamp and the tail lamp, to the two-wheeler companies. And within this lighting industry, we are seeing that there is a shift towards LED lighting, which will increase the overall content per vehicle as well as improve the margin for the company. And FIAM Industries is also diversifying into passenger vehicle lighting. It has already received orders from M&M as well as Mercedes Benz. And going forward, it could help the company diversify it and reduce its over dependence on the two-wheeler industry. So FIAM Industries remains our second Diwali pick. The key risk here again could be delay in launch of new products or from the client OEMs side, and frequent technology changes in the lighting industry again could impact the stock. Moving forward to the third pick. Subros Limited. So we are recommending with a target price of 1,355 rupees, which implies an upside potential of 27%. Now, Subros is a supplier of air conditioning systems for passenger vehicles, that is cars, as well as for the commercial vehicles. It's a proxy play to the industry leader Maruti Suzuki as well as M&M, and has almost a 40 to 45% market share in the passenger vehicle industry. And with the industry expected to significantly grow in its volumes in the second half of FY26 and next year as well, naturally Subros will benefit out of that. Also, the mandatory AC cabin norms in the commercial vehicle industry from June onwards, that has led to each truck having an in-house air conditioning system, which has been made mandatory, and that is also benefiting Subros. So Subros has a 40% market share in that CV industry as well. So overall, it's expected to benefit from the growth in volumes as well as the mandatory AC norms in the commercial vehicle industry. A key risk again here could be the disruption in the supply chains, especially for critical components like compressors, as well as the volatility in the raw material and forex. Since the large components such as compressors are still imported. So that's an update on Subros. Moving forward to our fourth pick, that is Ashok Leyland. So Ashok Leyland, we are recommending with a target price of 170 rupees, which implies an upside of 24% from the current levels. The key drivers here again are the GST rationalization we are seeing. So it will reduce the overall cost of trucks and buses, and that will benefit in terms of the replacement demand also coming in. So in India, almost the average life cycle of a truck currently has gone up to 10 to 10 and a half years, which is high given the average life cycle of 7 to 7.5 years. So last few years, as the cost of trucks has gone up, people are not buying new trucks and keeping on using the old ones. So with the reduction in the prices of trucks, the replacement demand is also expected to kick in. and also new demand from sectors such as construction, infrastructure, and logistics. That again will boost the volume growth. Again, it's a EV arm, that is a switch mobility, that is profitable at the PBT level. And for the full year FY26, the company is targeting to make it positive at the PAT level as well. So switch mobility again will be able to handle its own growth, and the fund infusion from Ashok Leyland will not be required. So that again will be a positive. Key risk here again will be the increase in the competition. So Tata Motors, the market leader, will look to maintain its position. SML Isuzu has been acquired by M&M. So M&M will be eager to increase its market share in the truck and bus segment. So there could be an impact on the pricing, and any slowdown in government capex or delay in the government capex could impact the volume growth in the truck segment. Moving forward to the fifth pick, that is Swaraj Engines. So Swaraj Engines we are recommending with a target price of rupees 5,112, which implies an upside of 24% from current levels. The key drivers here again are, so Swaraj Engines manufactures the tractor engines for the Swaraj brand of tractors, which is from the M&M group, and M&M is the promoter of this company as well. So GST reduction on tractors as well as normal monsoon, that has led to significant growth in the tractor industry in the first half, as well as going forward in the second half. Again, the growth is expected to be robust. Also, the trend of farm mechanization is gaining steam. So, as farm laborers are getting costly, there is increase in the wages. Farmers are moving and shifting towards farm mechanization to reduce the overall cost of farming. So Swaraj Engines remains a play on the tractor industry, and with the tractor industry expected to remain strong at least for the next few quarters, the company will benefit out of that. Key risk here again are the loss in Swaraj brand market share. So that could impact the tractor engine volumes for Swaraj engines, as well as any significant volatility in the raw material cost, especially of steel, could also impact the margins. Moving forward to our sixth pick. Yeah, so moving now to the healthcare industry. So Apollo Hospitals is our pick for this Diwali. We are recommending it with a target price of rupees 8,675, which implies an upside of 11% from the current levels. Apollo Hospitals by far the largest hospital player in India, and next 3 to 4 years it's looking to add significant bed capacity with a capex of about 4,500 crores, and looking to penetrate into newer regions as well as increasing its presence in the existing metro markets. So that could be a key growth driver for the company. Also, margin expansion in its Apollo Healthco subsidiary, which is into the digital pharmacy as well as the pharma distribution. That again will be a key trigger for the stock. Apollo Healthco, by the way, is achieving profitability. So in Q1 last quarter, it reported its fourth consecutive quarter of profitability. The company has also announced the demerger of this company, that is Apollo Healthco, to unlock value. So there again could be significant value unlocking over there. So remain overall positive on Apollo Hospitals. Key risk here again would be changes in the regulatory environment. So as it's a social sector overall, governments don't like the hospital rates increasing dramatically. So any significant price hike could trigger action from the government side. And doctors again are an essential component of this industry, and failure to attract or retain the top doctors and talent could impact the overall performance of the company. So those were the picks from my side. Moving on to Shweta, who will take forward on the BFSI segment.
Next slide. HDFC Bank, we have recommending at a price of 973 with a target of 1110 with an upside of 14%. So HDFC Bank is one of the leader in the private sector banks. We expect the loan growth in the bank to revive from now on. For the last 2 years, with the merger of HDFC, its focus has been solely towards deposit aggregation. But right now, after reaching a comfortable CD ratio of 96% as of June 25, we expect the bank to going forward to focus on the loan growth. We expect the loan growth to recover to 10% in FY26 and 13% in FY27. And going ahead, it expected to outpace the industry average also. It has a very robust deposit profile with a deposit aggregation of around 14% in FY25 and 16% in 1Q FY27. It has a very strong CASA ratio front. On the margin front, we expect uh, the near-term policy rate cut is expected to be balanced by higher retail assets, as it has a very strong share of RAM portfolio. On the asset quality front, HDFC Bank has one of the best asset quality in the industry with a GNP of 1.4% and NNP of 0.5% as of June 25. And the management remain very confident of keeping the credit cost at below 50 basis points for FY26. So these are the main key triggers. The key risks to our expectations are slower than expected loan growth and slower aggregation in the deposit book can drag the CD ratio. Moving forward to our next pick is Indian Bank. Indian Bank has performing very strongly for the last one year, with and has been reporting an ROA of around 1.3% resiliently throughout the year. Its strong RAM portfolio has helped us to register a growth of more than 10%. Today, it has reported its number of 1Q. The growth has been very strong at 13%, and the deposit growth has also remained very strong at 12%. On the asset quality front, we have witnessed an improvement. The GNPA has declined to 2.6% from 3% as of June, and the NNPA has declined to 0.2%. We expect its margin portfolio, which has almost 81% of its loan linked to 1 year MCLR, the repricing will be slightly slower. Apart from that, the strong RAM expansion, as of 2Q, the growth has been 16%, higher than its overall loan book growth, will support the incremental blends, while the selective corporate growth will help in to avoid yield dilution, keeping the NIM stabilized for the second half of the year. We recommend the Indian Bank at a target price of 875 with an upside of 15%. The key risks to our estimates are slower than expected CASA recovery, NIM compression from prolonged rate cut cycle, and higher slippages in stressed assets. Moving forward, our next pick is NSDL. We are recommending NSDL at a price of 1198 for a target price of 1380 with an upside of 15%. NSDL is a SEBI-registered market infrastructure institution which enables security to be stored in a dematerialization form and also help in transaction between buyers and sellers on an electronic form. On a demat value basis, it has 86.6% share and it has presence across 99.3% pin codes and in 194 countries. It has 33.9% share in the number of deposit and it commands a stronger 77.6% share in the DP centers. It is a part of the duopoly infrastructure where CDSL and NSDL are the only players. On a demat count basis, we have seen the market share has improved to 15.5% from an average of 9.4% on a YY basis. And as of September, we see the market share accretion in the demat account has been higher than the historical run rate. On the leadership, it has a leadership in the unlisted market. The market share in the unlisted market stands at 73.2, which has slightly increased from 70.8 in the last year. It has two subsidiaries, NSDL Database and NSDL Payment Bank, which are very small. So we expect as this subsidiary mature, it will add on to the wholesale profitability. Now looking at the key risk, prolonged weak capital market sentiment and potential drag for payment bank subsidiary. That's it. I'll now request my colleague Monica Chauhan to take over the webinar.
Works from the consumption side. But before taking a look into the key investment rationales of Jubilant FoodWorks, I would just quickly like to brief about the current trends in the consumption sector. So firstly, the recent changes in the GST has resulted in reduced rates from 18 or 12% earlier to 5% for most of the FMCG product categories. So in longer term time frame, this is positive and will drive consumption. But in short term, the transition to new GST rates has created some short term challenges. For example, in the month of September, many distributors or retailers started liquidating their existing high-priced inventory, which has resulted in delayed flow of new orders for many consumption staple companies. If we look, consumers are also deferring purchases to benefit from low MRPs. So the growth and profitability of consumer staple companies is likely to see some impact in near term, at least in the gone by quarter of second quarter. But in long term, no doubt it will lead to healthy volume gains for consumption related stocks. Then there is increasing premiumization and rising shift in the product mix. So even while staples are under pressure, demand for higher margin items like personal care, value-added foods is on the rising trend. And major brands are increasingly investing in new product innovation or categories to capture this mix shift. Then there is a shift in the channel and distribution also. So e-commerce or quick commerce, as we all know, is growing very rapidly, particularly in the metro or urban areas. So although traditional trade is still dominating in many areas, the share is gradually being eroded by modern trade as well as online sales channel. Apart from this, we all know that discretionary spending increases during festivals like Diwali. So that coupled with government initiatives in the form of income tax relief, GST rationalization is likely to further drive overall consumption spending by consumers. So taking into consideration all these factors, we have recommended Jubilant FoodWorks. If we particularly talk about the company, then Jubilant FoodWorks is one of the largest QSR companies in India. And as I mentioned, that there is a rising shift in channel mix towards e-commerce or quick delivery. So we can see that delivery channel of Jubilant Food has shown very good growth over the past 6 quarters. The company's delivery revenue is also growing consistently in double digits, which is driven by company's efforts towards delivering value to customers, menu innovation, delivery within 20 minutes, and waiving off of delivery charges. The company is also taking initiatives to revive its dine-in revenues. The company's dine-in revenues have been sluggish from the last 2 quarters. And in order to revive its dine-in revenues, the company has started with value offerings during lunchtime to bring back the store traffic. So the management expects growth of this channel to increase to 5 to 6%. And just to mention, the dine-in revenues had shown a moderate growth of 2.5% in the first quarter of FY26. And as said earlier, the recent GST rate rationalization will also drive discretionary spending on food and beverages, which can benefit QSR companies as well. So besides the increased consumption, Jubilant FoodWorks will also benefit from reduced input cost on key raw materials, such as the pizza bread, cheese, butter, etc., which have been moved from the 12% to 5% GST rate category. So the cost savings are likely to enhance the company's competitive pricing, resulting in increased demand and like-for-like growth for the company. Also, the company is expecting about 200 basis points of improvement in its standalone margins by FY28, which will be driven by gradual improvement in its newer brands and operating efficiencies through decentralized leadership team, technology integration, and supply chain. So one can buy Jubilant FoodWorks for a decent return of about 14 to 15%. We expect the company to achieve a target price of rupees 720 in the medium to longer term time frame. And some of the key risks in the Jubilant FoodWorks can be, increase in commodity prices, moderation in its LFL growth of its Domino's India business, rise in competition, and continued consumption slowdown. So this was one of our picks from the consumption space. Now to discuss the other stock picks of Diwali 2025, I would like to pass on the floor to Rajesh sir.
Yeah, thanks, Monica. I hope I'm audible to all of you. So next company is Azad Engineering. We are recommending at 1719 and target is 2105. With the current price, the upside potential is nearly 30%. And if you talk about the business model, the company is the leading manufacturer of the equipment which is used for the industries like aerospace, defense, energy, oil and gas, etc. The company supplies a mission critical equipments. That means a company can't perform its activity without the equipment supplied by Azad Engineering. So company is a leading player in the aerospace. That's number one. The company has a market client base. Just to give you a few names here. So the companies like Mitsubishi, Honeywell, GE, even Siemens. So all these companies are the clients of this company. And if you look at the global capability of this company, the product supplied by this company offers, far more cost advantages compared to other players. So 20 to 30% of the products supplied by the company are cheaper as compared to other companies. So that provides the an advantage to Azad Engineering, and it is possible that the company will be the first company in India to develop the gas turbine engine for DRDO sometime later in the future. And if you look at the order book, nearly 6,600 crore rupees order book, which is nearly 15 times of its FY25 sales. So that provide a very robust revenue visibility for Azad Engineering. So if we speak about the growth outlook, the company has guided for 30% plus growth in the revenue, EBITDA, and the PAT. And so overall growth outlook for this company is quite strong. The risk for this company would be the long execution time. Despite the fact this company has a robust order book, please note that these orders have to be executed over the next 7 to 8 years. So there's a long gestation period for the order execution. Apart from that, if company fails to deliver the product as per the specification required by the clients, then the company may lose the client. And there's a lot of time consuming process to really get approval for the product. So barring these few risks, I think the overall outlook for this company is very good. A long-term investor can have this stock in the portfolio. Can we have the next slide? Yeah, so the next company is Oswal Pumps Limited. This company supplies basically pump used for industrial and the agriculture purposes. With the current price of 745, the company's upside potential is roughly around 30%. So as we all know that this company basically supplies the pumps, the complete package. That means a solar pump having a module, pump, and other equipments as well. The company supplies the entire product as a whole. And the company has got nearly 2 decades of experience in the pump manufacturing businesses. And this company is one of the leading supplier of the pump under the PM Kusum scheme after its entry into this scheme in 2021. And the company having the largest player in this segment. And till date, they have supplied 45,000 plus pump under this particular scheme. Addressable market for this industry, the business is quite good. And just to give you few numbers here, the grid connected pump, if they have to convert into solar pump, that will provide a $29 billion opportunity for a company like Oswal Pump. Plus, in the PM Kusim scheme, the total pump approved by the government was 1.2 million. However, the supply so far have been only 0.8. So that provided a further headroom to supply the pump under the PM Kusim scheme. The company is the largest player in the state like Maharashtra, Haryana, and some of these agriculture states. So overall, the growth outlook for the company is quite decent. The guidance shared by the company is that this year, FY26, the company will report 50 to 60% growth in their revenue, while the 35% kind of revenue growth will be likely over the next 2 years after 26. So the growth outlook, the margin, the valuation, everything is quite attractive for this company, and therefore we are recommending also pump for our Diwali pick. Just to give you a few risks here. So again, the risk is that there's a high dependence on the government scheme like PM Kusum. If the government decides to, cancel this scheme, that will lead to, setback for the company. They may not be able to supply that pump under that scheme. Plus, backward integration to manufacture models, etc., will be highly capital consuming. That may dilute their return ratios. That could be another, I would say, a risk for the company. Um, Plus, since this company operates mainly in the few states like Maharashtra and all, so high concentration in this state may further provide some kind of a risk for the company. So that's all from my side. Now I pass on the line to my colleague Harsh for more companies. Thank you.
Yeah, thank you, sir. So moving to our next stock pick. So we have recommended Nalco at a CMP of rupees 217 and having a target price of 260, which is an upside potential of around 19.6 to 7%. So talking about Nalco, it is one of the largest integrated bauxite, alumina, and aluminum and power complexes player in India, and it is the lowest cost producer of bauxite and alumina globally. Moving to its growth drivers, so the first growth driver I would say is that the LME prices of aluminium, were hovering around $2,200 to $2,300 per ton in early Jan, which has now driven an increase to around 2750 to $2,800 per ton levels. So that is the first growth driver. Second, I would say is that the company is setting up a fifth stream in its existing alumina refinery, which is around 2.1 MTPA, and it will increase by another 1 MTPA, taking it to 3.1 MTPA. And the work progress as on 30th June 2025 was around 75%, which was complete. And the commercial productions are expected around April 2026. The next growth driver would be the coal sourcing. So the total coal requirement for captive power plant is around 7.2 MTPA, and the company has around captive coal of around 4 million tons per annum. So the rest 3.2 million tons per annum will be sourced from Coal India. And the difference between Coal India and its own coal cost is around 300 to 400 per tons. So that will be the savings on the captive coal, which the company will benefit from that. Talking about the valuations, the stock is trading at FY27 EV by EBITDA of around 6.1, which is quite reasonable. Talking about the key risk, so if there is any decrease in the price of LME aluminium, or there is any regulatory changes from the government, so that could hamper the growth of Nalco. Now moving on to the next slide. The previous slide talking about Indian metals and ferroalloys. Yeah, thank you. So here we have recommended Infa at a CMP of rupees 1163 with a target price of rupees 1415 with an upside potential of 21.7%. So talking about Infa, it is the India's leading fully integrated producer of value-added FECR, which is ferrochrome, having a production capacity of around 284,000 metric tons per annum. Talking about its growth driver, so the first growth driver is that the company is expanding its capacity of ferrochrome by 96,000 tons per annum in two phases. So the first phase will come on stream by June 26 with 48,000 tons per annum, and the another phase will come in September 26 by another 48,000. So the overall capacity will increase by 35 to 40%. So that would be the first growth driver. Second, along with that, the company has also received an principal approval of another 2 lakh million tons per annum. So that is, that would lead up to 584,000 metric tons per annum in total. Then moving on to the second growth driver, we have the FECR prices. So currently the FECR prices has, risen from rupees 1 lakh ton to around 1.2 lakh rupees per ton. So that has also that will also have an additional advantage to Infa in its quarterly earnings. Then talking about the third growth driver, is that the company is also coming up with an ethanol project. So that will have an sales of around 300 crores, producing an EBITDA of around 7 to 8%. So these are the three growth drivers which the company bags on. Talking about the valuation, the stocks trade at FY27 P multiple of 12.3 times, which is quite reasonable. Talking about his key risk, so any a decline in the prices of ferrochrome and chrome ore prices, so that could hamper the growth of Infa, along with any delay in capacity expansion. Now moving to our last stock pick, which is Pondy Oxide and Chemicals Limited. Yeah. So this stock we have recommended at a CMP of rupees 1,240 with a target price of rupees 1,530, having an upside potential of 23.4%. So what does Pondy do? So it is India's leading recycling and manufacturing company, and it is pioneering lead and lead alloys. Presently, the company has around four major recycling verticals. So they are lead, copper, plastics, and aluminium. Now moving on to its growth driver. So currently the capacity of lead is around 1,32,000 metric tons per annum, and the company is expanding the same by another 72,000 metric tons per annum. So in 1Q FY26, 36,000 metric tons per annum had come on stream, and the second 36,000 metric tons per annum will be on stream in 2Q in second half of FY26. So this will help to drive additional volumes along with additional revenue and increase in profitability. Then the second growth driver is that the company is starting another segment, which is the aluminium. So this will also add generate revenues for the company. So that will also help to increase the profitability of the company. Talking about his FY26 guidance, so the company has guided for a consolidated revenue growth of 30% and also has increased its blended EBITDA margin from 6% to 7%. So these were the three growth drivers of Pondy Oxide. Talking about its valuation, the company trades around on FY27 P ratio of 23.8 times, which is quite reasonable. And talking about its key risk, so any delay in capacity expansion or any unfavorable changes in its government policies may hamper the growth of Pondy Oxide. Yeah, so that were the top 15 picks from SBI Securities.
Yeah. Next slide, please. Yeah. Gautam, next slide. Yeah, so thank you everyone. So this is a summary of all the 15 recommendation for this Diwali, that is Samvat 2082. So I will just quickly go through each and every stock once again. So what we have done, we have created this time basket of 15 stocks spread across multiple sector and different cohort of market cap. So if you look at from a banking or BFSI space, we have added stocks like HDFC Bank, which is a representative of a private bank, Indian Bank from a PSU bank basket, and NSDL, which is an proxy play to an capital market story. We have given a maximum allocation to an auto as a sector. So if you look from an auto pack, we have added large caps like TVS Motor, which is a proxy play on two-wheeler growth going forward. Ashok Leyland, where we believe that second half of fiscal year is likely to be better in terms of commercial vehicle volume growth. So Ashok Leyland is one stock which we have recommended from this pack. And then we have recommended three stocks from an auto ancillary space. One is the Subros Limited, which is one of the largest manufacturer of AC components for auto passenger vehicle and commercial vehicle segment. FIAM, which is the largest, one of the largest player on lighting side, and Swaraj Engine, which is an exclusive supplier of engine for an Swaraj brand of Mahindra and Mahindra. So again, moving on to the next sector from consumption, we have taken Jubilant Foodwork. So we believe QSR has seen a significant underperformance during the last 4 to 8 quarters. And because of this GST rationalization, there is a probability that QSR as a business is likely to do well going forward. So again, Jubilant Foodwork, which is one of the market leader on in this segment, we have recommended that stock from this space. Among the defense and aeronautics, we have recommended one company which is Azad Engineering. Again, Rajesh has very well covered what are the key growth driver for the companies. And and among the agri rural theme, we have recommended the recently listed new company which is an Oswal Pump, which is again a market leader as far as solar pump is concerned. And there is an expectation that earnings can grow at a CAGR of 30 to 40% over the period of next 2-3 years. And last but not the least, among the metal and mining space, we have recommended Nalco and at the same time Infa, which is an Indian metals and ferroalloys, and Pondi Oxide, which is into the recycling of lead and other commodities. So these are so overall, if you're planning to deploy a fresh capital for next 12 months, this is a very well balanced basket spread across the large cap, mid cap, and small cap. Even the mix across the sector is very well diversified, so there is no risk as such wherein there is a significant exposure to one of the sector or one of the stock. So if you're planning to deploy a fresh capital, and you can you can equally invest in each and every stock, so that an equal weighted basket is created, and you can hold on to all this stock for next 6 to 12 months. As we progress forward, in case there is any changes during the year, as we all know that the markets are still very volatile, and we will keep on intimating you through your relationship manager and through mobile app, and at the same time various WhatsApp as well as the Telegram group. And in addition to that, in case during the midway we are able to achieve the price target, we will intimate the same to you. Yeah, that's all from our side. Let us move on to Q&A. I think the first question is on pre-call by Shyam Sundar Agarwalji. So first of all, I would like to express my gratitude for taking time out from your busy schedule and attending this webinar. So coming to pre-call, again, we have got a positive outlook on entire auto ancillary as a segment, and pre-call is one of our preferred bet among the auto ends. But one has to keep in mind that FY26 is the year where the earning growth for pre-call is likely to be muted because of the recent acquisition which the company has done. But FY27 will be an inflection point in terms of earning growth. So what we are expecting is that during the fiscal year 26, the company's profit will be to the tune of closer to 200 to 220 crore, and that will expand significantly to 340 crore in FY27. So that will be closer to more than 50% jump in fiscal year 27. So maybe the street will start discounting this FY27 number as we move forward closer to November and December month. So pre-call, again, we believe the fair value of the business is closer to 700, 740 levels if somebody has got an investment horizon of 12 to 18 months. So continue to remain invested, and in case you are planning to deploy a fresh capital in pre-call, you can gradually add on to the position over the period of next 2 to 4 months. The next question is from Alisha ji. Indian bank valuation already high. So what I would like to allude to the fact that you are right in saying that the valuation of Indian bank as compared to the other peers in the public sector is slightly on a higher note. But again, one has to keep in mind that the financial metric or operating metric of Indian bank are far superior to other PSU banks. So if you look at Indian bank, ROA is closer to 1.3%. So today only the bank came out with the numbers, and in fact, the ROA of Indian Bank is superior to State Bank of India, that is 1%. So again, Indian Bank continue to remain our preferred bet among the PSU banking space. And even the asset quality is very robust. So if you look at net NPA, that is closer to 0.2%. So one of the best in class asset quality as far as Indian Bank is concerned. concerned. So our view is that Indian Bank will continue to command a relatively premium valuation and will continue to deliver a 12 to 13% kind of growth as far as the advances and deposits are concerned. So continue to stay remain in Indian Bank. Don't worry about a valuation. I think any dip because of this volatility in the market will be the good opportunity to accumulate Indian Bank among the PSU basket. Then next question is from again from Sham Sundarji. View on GPPL have added at a price of 224 and since then stock is not performing. Yes, I agree with you, Shyamji, that the stock has not delivered any significant return during the last 1 year and has been a significant underperformer. And one of the reasons for that is the significant dip in volume as far as GPPL is concerned during the last 1 year. And at the same time, there is an overhang that GPPL, its promoter, which is one of the foreign promoter APM terminal, their license is likely to is due for renewal in the calendar year 2028. So it is slightly cagey, and against that we are seeing a very robust volume traction as far as the other peers like Adani Ports or JSW Infra is concerned. So that is one of the reasons that we have seen a kind of underperformance from GPPL. Now, since you have invested at a very high level, that is at 224 level, what I would suggest is that let us wait for this quarter number, which is a September quarter number, and then we can take a call whether we should book losses in GPPL or there is a scope of recovery of money by by averaging at a lower level. So since you have been holding since last 1 year, would request you to please continue to hold for a month, and so let us watch this quarter numbers. Anyway, most of the negatives are already in the price. So in case there are some positive signs in in terms of volume growth or earning growth, we are hopeful that the company will start to outperform going forward. So kindly remain invested for a month or two, and let us wait for this quarter number, and then we can connect again through your relationship manager or through any other webinar which we keep on hosting on a regular basis. So again, the next question is from Siddharji. Good to see you again in all our webinars. Your outlook on 10-year GSEC bond yield and precious metal. So again, although I'm not an expert as far as bond market is concerned, but if I take a simple logic that there is a further scope of interest rate easing by Reserve Bank of India over the period of next 3 to 6 months, it seems that ultimately GSEC 10-year GSEC bond yield will also follow the repo rate trajectory, and that is heading towards towards an lower level. So currently 10-year GSEC is closer to 6.4, 6.5%, and that is likely to go down further in assuming that RBI is likely to further trim the repo rate. Your next question is on precious metal. Again, a billion-dollar question. So we have seen a very good return in gold and silver during the last 1 month, and precious metal as we speak is I mean, it's very difficult to guess whether there will be an further up move in gold and silver as we speak, because there is a lot of FOMO factor which is going on globally, whether it is in India or you might be hearing many news that silver is out of stock as far as physical markets are concerned, as those who are holding on to the silver inventory, they are not willing to sell, and in case you want to buy in physical silver, that is coming at a premium. Even in the domestic market, the ETFs prices are trading at a 10 to 15% premium to an actual value, which is an NAV, and that clearly shows that there is a lot of FOMO factor in the market. So what I would suggest is that that again, it's my personal feeling. I feel that after this obnoxious rally in the gold and silver, there is a probability that all these both gold and silver can move in a sideways fashion, or there can be some time-wise correction for next 4 to 8 weeks, and then post that, depending on global scenario, there is a probability that it may continue to move upward. Again, most of these things are also linked to an interest rate scenario globally. So we all know that US Fed meeting is due in the last week of October, and there is a probability of rate cut, 25 basis point rate cut, and that will the outflow of fund from safe havens like US bond will obviously lead to an chasing of a better riskier asset, whether it is emerging market equities or commodities like gold, silver, or any other metal. So I think would recommend you to wait and watch. Let's wait for all these FOMO factor to settle down. I personally feel that there is a probability of consolidation, time-wise correction over the period of next 4 to 8 weeks, as far as gold and silver are concerned. So again, Shamji has given compliment to Harsh on good luck high tech. Again, thank you, sir, for your appreciation. That gives us a lot of inspiration to work hard and identify winning ideas for all of you. So next question is from Sudhakarji. There are no stock from AI sector. So again, Sudhakarji, one has to keep in mind that AI as a sector is at a very nascent stage. And when we talk of AI, it involves a lot of multiple factors. When we speak of AI, we are talking about a lot of data, right? And ultimately, all this data will need a very high-end computing hardware and software. So there is one company, NetWeb. Again, don't take it as a recommendation. I'm just giving an example. So NetWeb, which is one of an India's company, which is into the manufacturing of servers and high-end computing units. So that can be one of the beneficiary. On the other hand, in case there is a lot of data, obviously they need to be stored, they need to be processed, right? So data center is one of them proxy play as far as the AI as a sector is concerned. Lot of computing power will be required as the usage of AI increases, right? So ultimately, the high-end chips or semiconductor will be in demand. And since AI will use a lot of power, so all these data centers are a power guzzling unit, the demand for electricity is likely to be going up across the globe because of this increase in data consumption. And hence, electricity or power as is a structural theme which we feel that will play out over the period of next 3 to 5 years, not only in India, in fact, globally. So the entire ecosystem related to power is again a proxy play on AI. So whole lot of things as far as AI is concerned. If you ask me, is there any company which is only into AI? So I won't be able to figure out any company which is only into AI. So a simple example, any company like TCS or Infosys, if you heard their commentary, they keep on talking about Gen AI, Gen AI. But ultimately, they are also using AI to improve their productivity and reduce the employee cost, right? So recently, HCL Tech started reporting AI as a separate segment. So during this quarter, they went on to say that $100 million is the revenue which they have generated using an AI as a technology. So again, gradually we will get to know which companies is benefiting out of this AI as a sector. There is no particular sectoral index or any one company which will benefit out of this AI. Again, it's at a nascent stage. So there are many narratives that this bubble may burst going forward. So let's see how this plays out as far as AI is concerned. Again, the next question is from a new age technology that is on hydrogen stock. Again, hydrogen as a hydrogen fuel cell as a technology again is at nascent stage, and many companies will be part of this ecosystem. So there are few companies which are likely to be manufacturing electrolyzer, which is one of the key component for this hydrogen related fuel cell technology. And at the same time, there may be some power producers which will be adopting this technology and will be generating power using this hydrogen fuel cell as a technology. So very few names are there which will be into this business. So one company which comes to my mind for this hydrogen related technology is basically Oriana Power. So they have won some contract for setting up this hydrogen related businesses. And in addition to that, you will see that most of the large corporate group, whether it is in Larsen and Toubro, Reliance, or for that matter Adani, they will be working on hydrogen as an technology, and they will be using this to generate a gray or green energy, so as they can, so as to fund or so as to provide power to their data center, which is one of a power guzzling business. तो देर इज अ रिक्वेस्ट फ्रॉम सत्या जी की तरफ से रिक्वेस्ट है कि ज्यादा बेहतर होगा यदि प्रदर्शन हिंदी में हो तो मैं समझ नहीं पा रहा था। सत्या जी माफ कीजिएगा, आप हम हिंदी में नहीं कंडक्ट कर पाए ये वेबिनार, बट अगेन यूजुअली हम हिंदी और इंग्लिश का दोनों का प्रयोग करते हैं। तो कुछ लोग हैं वो ज्यादा इंग्लिश से कंफर्टेबल होते हैं, कुछ हिंदी से। तो मे बी सिंस आपको अगर ये प्रेजेंटेशन समझ नहीं आया इंग्लिश लैंग्वेज में, मे बी आप आपके आपके अगर अकाउंट है हमारे यहाँ एसबीआई सिक्योरिटीज में, आपके रिलेशनशिप मैनेजर के थ्रू यू कैन गेट इन टच विद अस, और हम आपको जो भी एक ब्रीफ में एक्सप्लेन करने की कोशिश करेंगे कि हम क्या ये रिपोर्ट में कहना चाह रहे हैं। आई होप आपको ये रिपोर्ट मिल चुकी है, और आप ये रिपोर्ट देखोगे तो इसमें बहुत सरल सरल भाषा में, सिंपल लैंग्वेज में हमने सभी फैक्टर्स को कवर करने की कोशिश की है। तो एनीवे हैप्पी टू कनेक्ट विथ यू। आपसे अगर आपके कोई रिलेशनशिप मैनेजर है उनके थ्रू आप कनेक्ट कीजिए। Again, the next question is from Alisha ji. Views on Shriram Finance. Again, coming to Shriram Finance, what we feel is that the company we continue to remain positive as far as Shriram Finance is concerned. Again, because of this, its focus on vehicle finance as a segment. So they have got closer to 45% of their loan book exposed to commercial vehicle and 21% to passenger vehicle. And the AUM going forward is likely to grow at 15 to 20% CAGR. The asset quality is likely to improve further. And NIM, that is the net interest margin, which is one of the important parameter while assessing any NBFC. NIM is also likely to expand going forward because of the lower cost of funds. So continue to stay remain invested in Shriram Finance from a Supriya ji, if I understood your question right, what is the view on English teaching stocks? You mean to say all these stocks pertaining to education? So again, there are very few companies which have created wealth in this education as a sector. So recently, there is a one indirect proxy play which got listed on the exchange, that is Crizac Limited. So they are basically into an services wherein they connect the student and help them get admission in various universities across the globe. So Kridak is the one company which I feel is relatively well placed if somebody is looking to take an exposure to an education as a sector. And in addition to that, the recently listed company Jaro Education, so that company also seems to be doing well, but post listing we have seen that stock is trading below an issue price. So maybe let us wait for a quarter or two to see whether the performance which the company has delivered during the last 2 years, is it sustainable? Is there a growth which is clearly visible for Jaro Education? Because education as a sector, we have seen a lot of upheaval during the last 3-4 years. So Baiju, which was one of the market leader in this sector, that has gone belly up during the last 2-3 years. So again, there is a lot of competition which keeps on entering into this sector. So again, not very clear in terms of how the fee move, because you will see a lot of cash transaction which also happen in this sector, and that whether that is accounted in the actual company P&L, that is something very skeptical about. So again, we usually refrain from giving any recommendation from education as a sector, looking at it checkered path. Again, a very good question, sir ji. Nifty 1 lakh कब आएगा? So Devi Prasad ji, even I am waiting for that. level. But if I take a simple logic that at a 15% CAGR, there is a probability that Nifty can double in the next 4 to 5 years. So right now we are at a closer to 25,000 level as far as आज अगर हम बात करते हैं तो 25,000 की निफ्टी की लेवल है. आने वाले 3 से 4 सालों में ये प्रोबेबिलिटी है कि जो 25,000 का निफ्टी है 50,000 हो जाएगा. बट इसका मतलब ये नहीं है कि जब निफ्टी 4 साल में डबल होगा तो बाकी स्टॉक भी 4 साल में डबल होंगे. अल्टीमेटली एज एन इन्वेस्टर हमारा काम यही होगा कि ऐसी कौन सी कंपनीज है जिनकी प्रॉफिट ग्रोथ निफ्टी 50 के सामने ज्यादा बेहतर होगी. और यही सब ऐसे ही कुछ स्टॉक्स हम आपके सामने अलग अलग प्रोडक्ट के थ्रू रखते हैं. तो अगर आप राइट सेक्टर और राइट कंपनी में इन्वेस्टेड रहेंगे तो निफ्टी से बेहतर रिटर्न आपको आपके पोर्टफोलियो में आ सकता है. Again, there are some questions pertaining to ethanol stock. So I will club CN Agro and ethanol related query. तो इथेनॉल एज अ स्टोरी जो है काफी बूम में रही थी पिछले 3-4 सालों से. और अगर आप पिछले 3-4 महीनों की थोड़ी सी कमेंट्री या न्यूज फ्लो सुनोगे तो कहीं ना कहीं पब्लिक का बैकलैश बहुत चल रहा है सोशल मीडिया पर कि ethanol, the ethanol blended petrol is leading to an decrease in mileage for vehicles, and it is leading to corrosion of the vehicle also. So again, government has given assurance that they will continue with this ethanol blending program, and they have already achieved a 20% of blending target ahead of their target for 2027-28. And what I believe that this blending will continue to remain at 20% as we speak. Anyway, the tender for the next sugar year sourcing of ethanol is due. So we'll get to know how much increased quantity is. That is something which will come up for a tender over the period of next 1 or 2 months. So as of now, I would like to maintain a neutral stance as far as ethanol related businesses are concerned. And that is the reason we have seen a sharp correction in one of the large engineering company which is catering to ethanol, that is Praj Industry also. And CN Agro, again, I don't have any view on CN Agro. So if you look at CN Agro, that stock has been trading circuit to circuit since last many months. So there is no point in entering such stock which only trades at circuit to circuit. There is इसमें एक probability ये भी हो सकती है कि आपने ले लिया और बिकॉज ऑफ एनी बैड लक वहां से लोअर सर्किट लगना स्टार्ट हो गया तो एग्जिट काफी मुश्किल हो जाएगा. तो आई थिंक जहाँ जो लिक्विड काउंटर होते हैं वहां ट्रेड करना या इन्वेस्ट करना बेहतर होगा रादर देन टेकिंग पोजीशन इन सीएन एग्रो. अगले 2 क्वेश्चन है कार ट्रेड और जस्ट डायल को लेकर. कार ट्रेड एज अ बिजनेस मुझे लगता है कि काफी अच्छा कर रहा है. सालाना 200 करोड़ का प्रॉफिट बनाता है. 10,000 करोड़ की मार्केट कैप है. और जिस तरह से इनके जो दोनों प्लेटफॉर्म है वेदर इट इज एन ऑटोमोबाइल प्लेटफॉर्म और OLX जो है काफी अच्छे कर रहे हैं. मुझे लगता है कि थोड़ा एक्सपोजर लेने में कोई दिक्कत नहीं होना चाहिए कार ट्रेड में. तो पोर्टफोलियो का 3 से 4% आप अपना जो है कार ट्रेड विच इज अ न्यू एज बिजनेस इसको आप एलोकेट कर सकते हैं. मुझे लगता है कि मे बी क्लोजर टू 2200 2300 का जो लेवल है वो सही रहेगा कार ट्रेड में एंटर करने के लिए. बट अगेन यू नेवर नो कि वो लेवल आएगा कि नहीं. तो व्हाट आई वुड सजेस्ट कि आप थोड़ा सा एक्सपोजर अभी लेकर ग्रेजुअली इसमें पोजीशन बिल्ड कर सकते हैं. देवी प्रसाद जी का क्वेश्चन है कि सर हमने जस्ट डायल 1250 पे लिया है वो प्रॉफिट में कब आएगा. तो देवी प्रसाद जी आई एग्री विथ यू दैट हमने ये कॉल रिकमेंड करी थी और उसके बाद स्टॉक नीचे आ गया. बट एक चीज हमें ध्यान रखना होगा कि अगेन अगर आप जस्ट डायल की बात करें तो ये कंपनी में बहुत ज्यादा कैश होल्डिंग है. अगर आप जस्ट डायल का आज के डेट में मार्केट कैप देखते हैं 6,800 करोड़ का कंपनी का मार्केट कैप है. और कंपनी की अगर आप बैलेंस शीट में जाएंगे तो कंपनी के पास तकरीबन 5,500 करोड़ कैश है. तो 6,800 करोड़ में से जब आपके पास 5,500 करोड़ की कैश है तो जो कोर बिजनेस है जो कि एक्चुअल उसका ऑपरेटिंग प्रॉफिटेबल बिजनेस है उसे कंपनी सिर्फ 1,200 या 1,300 करोड़ का मार्केट कैप दे रहा है. तो ओवरऑल वैल्यूएशन के पर्सपेक्टिव से वन ऑफ द बेस्ट कंपनी मैं इसे कहूंगा कि जो कंपनी के पास मार्केट कैप का 80% पैसा कैश में पड़ा हो तो ऑब्वियसली यहाँ से डाउनसाइड रिस्क लिमिटेड हो जाती है. बट जस्ट डायल के केस में प्रॉब्लम ये रही है कि डिस्पाइट ऑफ सो मच कैश कंपनी कोई बहुत ज्यादा ग्रोथ नहीं दे पाई है, क्योंकि एक लोगों को एक्सपेक्टेशन था कि जब इतना बड़ा कैश कंपनी के पास पड़ा हुआ है, या तो वो कंपनी वो कैश को यूटिलाइज करके कोई नया बिजनेस करे या बिजनेस को एक्सिलरेट करे, या तो दूसरा ऑप्शन है कि अगर उसका कोई यूसेज नहीं है तो उसे डिविडेंड के फॉर्म में शेयर होल्डर को दे दे, ताकि जो कंपनी की आरओई है, रिटर्न रेशियो है, वो यहाँ से बेहतर हो सके। इस बार की अगर हम क्वार्टर की बात करें, जो कि सितंबर क्वार्टर के जब नतीजे है, तो ये क्वार्टर में थोड़ा सा जो नंबर था वो वीक रहा था, क्योंकि लास्ट ईयर की अगर आप क्वार्टर देखेंगे सितंबर 2024 की, तो उसमें अदर इनकम काफी ज्यादा आया था, उसी के चलते कहीं ना कहीं ये क्वार्टर में वाई वाई आपको नंबर में डिप दिख रहा है। अल्टीमेटली ये कंपनी में जब कंपनी जो है अपने ग्रोथ पाथ की ओर जब तक नहीं जाएगी, तब तक थोड़ा सा इसमें दिक्कत है। तो अगर आपको इससे बेहतर अपॉर्चुनिटी लगती है मार्केट में इन्वेस्ट करने की, तो आप ये स्टॉक से हटके दूसरे स्टॉक में भी जा सकते हैं, क्योंकि अब मार्केट में मोमेंटम बनता हुआ नजर आ रहा है। बट अगर आप मुझे पूछोगे कि ये कंपनी खराब है क्या, आई थिंक द बिजनेस इज डूइंग प्रिटी वेल। कंपनी के पास 6,800 करोड़ के मार्केट कैप में तकरीबन 5,500 करोड़ की कैश पड़ी है, बट अल्टीमेटली ये जो कैश है इससे कंपनी को डिप्लॉय करना होगा टू विन द शेयर होल्डर कॉन्फिडेंस। Next question is about Prashant, from Prashant. What about IT sector? So Prashant ji, again coming to IT sector, so we have seen a few large companies reporting their number, including TCS, HCL Tech, and today, in fact, Wipro has also reported the number. So what we feel is that IT sector have reported either in line with expectation number or slightly better number, and at the same time outlook seems to be little bit upbeat, at least for an second half of fiscal year and for the next year. तो FY26 is the year जहां हम थोड़ा प्रॉफिट ग्रोथ म्यूटेड देखेंगे, और 27 में हम देखेंगे कि प्रॉफिट ग्रोथ जो है रिलेटिवली बेहतर होते हुए नजर आएगी। अगर मैं स्टॉक प्राइस के पर्सपेक्टिव से बात करूं, तो जो भी निगेटिविटी है वो आईटी सेक्टर में ऑलरेडी डिस्काउंटेड है, और अगर अब यहाँ से हम मार्केट को ऊपर जाते हुए देखेंगे, तो मुझे लगता है कि आईटी सेक्टर में शॉर्ट कवरिंग भी हो सकती है। तो आईटी सेक्टर में शॉर्ट नहीं करना है, अगर लॉन्ग करना है तो सिलेक्टिव कंपनीज लाइक एचसीएल टेक, परसिस्टेंट, कोफोर्ज, इन पे आप फोकस कीजिए, ग्रेजुअली एक्यूमुलेट कीजिए आने वाले 2 से 3 महीने में। आई एम श्योर उसके बाद के आने वाले 12 से जो 18 महीने हैं वो आपके लिए बेहतर रहेंगे, अगर हम आईटी सेक्टर की बात करें तो। Again, I think now we can take last 2-3 questions. So I will club most of the question at one go. तो अगर हम देखते हैं, one question is on RPSG Venture, one question is on BESS and Gold Finance business. Then one question is on Apollo Hospital. One question is on Minda Corp. And one question is on which companies will bring in, which multinational companies will come up for an IPO. So I will try to club all the answer at one go. आरपीएसजी वेंचर की अगर हम बात करें तो यस, हमने ये कॉल लास्ट ईयर दिया था, और उसके पीछे जिस तरह से जस्ट डायल में काफी ज्यादा वैल्यू है, हमें लगता है कि आरपीएसजी वेंचर में भी बहुत ज्यादा वैल्यू। अगर आप आरपीएसजी वेंचर को देखेंगे, इसके कारोबार की बात करेंगे, तो ये एक होल्डिंग कंपनी है जस्ट डायल की, आप फर्स्ट सोर्स लिमिटेड की। तो अगर आप फर्स्ट सोर्स का आज के डेट में मार्केट कैप देखते हैं, तो तकरीबन 23,000 करोड़ का मार्केट कैप फर्स्ट सोर्स का अभी बना हुआ है, और आरपीएसजी वेंचर का ये कंपनी में तकरीबन 54% स्टेक है। तो अगर मैं सिंपल मैथमेटिक्स करता हूं कि 22-23 हजार करोड़ की कंपनी और 50% स्टेक, तो आज के डेट में मेरी जो वैल्यू है फर्स्ट सोर्स में वो तकरीबन 11,000 करोड़ की है। और अगर आज आरपीएसजी वेंचर का अगर आप मार्केट कैप देखेंगे, तो सिर्फ 2700 करोड़ का मार्केट कैप है। ऑन द टॉप ऑफ दैट, आरपीएसजी वेंचर लखनऊ की जो टीम है, आईपीएल टीम, उसमें 50% स्टेक होल्ड करती है, जिसके लिए उन्होंने जो बिड था $3 से 4 बिलियन में 2-3 साल पहले किया था। तो हमें लगता है कि काफी डीप वैल्यू है। हालांकि वो बात अलग है कि स्टॉक में मोमेंट नहीं आता है, क्योंकि इनका जो 2M करके जो ब्रांड है, बिजनेस है, स्नैकिंग का जो है, वो बिजनेस लॉस में चल रहा है। तो आई थिंक अगर किसी का हॉराइजन लंबा है, 2 से 3 साल तक होल्ड कर सकते हैं, तो हमें लगता है कि इसमें कभी ना कभी आगे जाके वैल्यू अनलॉक होगी, क्योंकि इसकी जो लखनऊ सुपर जायंट की जो टीम है आईपीएल की, वहां कहीं ना कहीं वैल्यू अनलॉकिंग के बहुत बड़े पोटेंशियल है। तो एक मल्टीबैगर आइडिया है, इसे रोज रोज देखोगे तो आप परेशान हो जाओगे। एंड अगर आपको लगता है कि आपको ये ट्रेडिंग पोर्टफोलियो में आपने लिया था ये स्टॉक, तो आप इसे बाहर होकर आप दूसरे बेहतर जो मोमेंटम वाले स्टॉक है वहां आप पार्टिसिपेट कर सकते हैं। कमिंग टू बीईएसएस, यस बीईएसएस में आपका गैस सही है कि काफी सारे नए प्लेयर इसमें फोरे कर रहे हैं, बट अगेन ये जो बीईएसएस एज ए सेगमेंट है ये अभी नेसेंट स्टेज पे है, काफी फास्ट ग्रो होगा। तो इसमें जो मार्जिन है ऑब्वियसली जो सप्लायर रहेंगे, इनिशियली तो मार्जिन कंप्रेस नहीं होते, इनिशियली 1 या 2 साल, जब इंडस्ट्री थोड़ी बड़ी हो जाती है, मैच्योर्ड होने लगती है, तब डेफिनेटली मार्जिन में कंप्रेशन देख सकते हैं। अभी तो मुझे लगता है कि जो मार्जिन थे एटलीस्ट 4 क्वार्टर तक बेहतर ही रहेंगे बीईएसएस से रिलेटेड सेगमेंट के लिए। रही अपोलो हॉस्पिटल की बात, तो अपोलो हॉस्पिटल अगेन हमारे दिवाली पिक का एक स्टॉक था, और रही लोन लेने की बात अपोलो हॉस्पिटल लेने के लिए, तो माफ कीजिएगा एसबीआई सिक्योरिटीज आपको लोन नहीं दे पाएगी, बट डेफिनेटली हमारा मार्जिन ट्रेडिंग फंडिंग का एक फैसिलिटी है विच यू कैन यूटिलाइज टू बाय एन स्टॉक्स लाइक अपोलो हॉस्पिटल। So there was one question on energy sector, एनर्जी सेक्टर की बात करें तो वहां से हमें लगता है कि ऑयल मार्केटिंग कंपनीज जो है आने वाले समय में अच्छा कर सकती है। तो एचपीसीएल की एक हमारी कॉल ओपन भी है पिक ऑफ द वीक में, मैं रिकमेंड करूंगा कि अगर आप मीडियम टू लॉन्ग टर्म के लिहाज से देखना चाहते हो एनर्जी सेक्टर में, तो एचपीसीएल को डेफिनेटली कंसिडर कीजिएगा। नेक्स्ट मिंडा कॉर्प, अगेन मिंडा कॉर्प की भी कॉल हमारी ओपन है। रिसेंटली मिंडा कॉर्प ने एक अपना गाइडेंस भी दिया था कि 2030 तक 2030 तक कंपनी जो अपना रेवेन्यू है 2 से 2.5 गुना करेगी आने वाले समय में, और उसी का जो बेनिफिट है आगे प्ले आउट होते नजर आएगा। थोड़ी सी लॉन्ग टर्म स्टोरी है, हमारा कॉल भी ओपन है मिंडा कॉर्प में, तो बने रहिए, आई एम श्योर अच्छे रिटर्न बनेंगे यहाँ पर। Siddharth ji, which multinational companies can come up for an IPO going forward? So again, it's a very difficult क्वेश्चन टू आंसर, बट अगेन जो बड़े आईपीओ जो आगे लाइंड अप है उनमें से कुछ नाम जो मुझे ध्यान आता है वो है लेंसकार्ट, ग्रो, जो आने वाले 15 से 20 दिनों में शायद अप्रोच करेंगे मार्केट को फॉर फंड रेजिंग। सो दिस आर द 2 लार्ज आईपीओ विच जो हमें लगता है कि आने वाले समय में आते हुए दिखेंगे। रही लास्ट क्वेश्चन एलजी की बात, तो एलजी के लिए हमें लगता है कि कंपनी 2028 में तकरीबन 3,000 करोड़ का प्रॉफिट करने की क्षमता रखती है। FY25 में 2,200 करोड़ का प्रॉफिट कंपनी ने किया था। तो अगर मैं सिंपल मैथमेटिक्स लगाता हूं कि 3,000 करोड़ का प्रॉफिट, 40 का प्राइस टू अर्निंग मल्टीपल, तो तकरीबन 1,20,000 करोड़ का मार्केट कैप मेरे को एलजी में आते हुए दिखता है। और अगर हम आज की बात करें तो आज कंपनी का जो मार्केट कैप है तकरीबन 1,13,000 करोड़ है। तो FY28 में अगर मैं 40 का पी मल्टीपल देता हूं तो फेयरली वैल्यूड है, बट अगर मैं 50 का पी मल्टीपल देता हूं विच इज अगेन अ सेंटिमेंट ऑफ मार्केट एट दैट पॉइंट ऑफ टाइम, यहाँ से मार्केट बेहतर हो गया तो हो सकता है कि इनकी जो पी मल्टीपल है वो स्ट्रीट बेहतर देने लगे। तो इफ यू टेक दैट लॉजिक, तो मुझे लगता है कि 2,200 का भाव है, आने वाले 12 से 18 महीने में हम एलजी में आते हुए देख सकते हैं। तो अगर आप फ्रेश कैपिटल डिप्लॉय करने की सोच रहे हैं तो मैं आपसे ये रिकमेंड करूंगा कि थोड़ा सा नीचे आने दीजिए एंड ग्रेजुअली आप एचडी को बाय कर सकते हैं। Yeah, so I think we have covered most of the questions, and thank you all for attending this webinar, and I once again wish you all an happy Diwali and prosperous new year on behalf of entire SBI Securities team. Yeah, good day and thank you.